Well, hello there, and welcome to another episode of Ask Dr. Bitcoin. We're live. We're behind the scenes. We're going to be doing a little bit of recording today. We are going to be, I wouldn't say reacting to, but there was. So if you follow Bitcoin at all, there's an analyst name by the name of Anthony Pompliano, goes on CNBC quite a bit to talk about just everything about Bitcoin, the crypto space. A lot of times about mining. Today he's talking about the effects of the ETF on the total supply coming from miners of Bitcoin. And so we're going to go through his analysis, and then we're going to plug those numbers into some charting software and actually come up with some price predictions based on what he's saying. So that's going to be fun. Stay tuned, and we'll film this thing together, will we? You want me to do the quick sponsor spot since we're live?
Sure.
Okay. So, hey, if you need to start a podcast, Harper Belmont is your solution. That's the studio that does all of our work. HarperBelmont.com. You should start a podcast and join me here. It'll be fun. We'll work on the marketing copy at some point.
Yeah.
But that's you should buy it anyway. Okay, so I guess what we're going to do is we'll start out, and I'm just going to go through the script, and no. Let's watch this video together first. There's going to be a spot in the transcript where I throw to the video, but that's for post-production. So let's just watch this together, and then we'll do the analysis.
Welcome back to Squawk Box. The price of Bitcoin crossing back over the $48,000 level over the weekend, 1 month this after the launch of the spot Bitcoin ETF. This morning, trading slightly lower. Joining us right now is Anthony Pompliano, founder of Pomp Investments. Good morning to you.
Morning.
This has been a bit of a wild ride because we talked about sort of selling the news or selling the rumor, buying the rumor, selling the news. But now we've come back to buying.
Yeah. I mean, look, the verdict's in, right? Wall Street doesn't just like Bitcoin. They love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year.
I don't know how CNBC works. Maybe we need to provide some commentary.
But the most interesting part of this is the inflows.
Yeah, we're going to let this play out because I've got all of our commentary set aside. I just want to kind of like bathe in the numbers first.
It's actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So how much of this do you think is
so that, I mean, if you want to pause it here. So that's like the critical piece right here. What he's talking about is the rate at which, and we talked over it a little bit, the rate at which these ETFs are consuming Bitcoin and the rate at which the Bitcoin network produces new Bitcoin. And he's going to go into a little bit more data here. There's going to be a sanity check from one of the other CNBC hosts, and then he's going to kind of double down on his numbers. So it's interesting we should probably let it play out here.
You just measure the actual net inflows, right? And so you can just see there is way more buying pressure.
So you're saying $3 billion for BlackRock.
There's $4 billion now for BlackRock, 3.5 for Fidelity, and then you've got Bitwise and 21 Shares will both hit about $1 billion this upcoming week.
Total valuation though of Bitcoin, if
$1 trillion.
The market cap is $1 trillion. So isn't this a de minimis issue or no?
Now here's where it gets really interesting.
Most of these things aren't trading.
80%
right
of all Bitcoin in circulation has not moved in the last 6 months. You have only about $200 billion is actually tradable. And so that means that these ETFs sucked up 5% of the entire tradable supply of Bitcoin in 30 days. I mean, Bitcoin has become Wall Street's favorite asset.
See, they're speechless. They don't know what to say.
I'm not going to say. 5% doesn't sound like a lot. Here's what I'm
in 30
thinking.
days?
It used to take a lot for someone to invest in Bitcoin.
Yes.
It's real easy right now. And I don't know. Are we going to 90,000 in a year? That'd be too weird. People don't double their money by buying an ETF in a year. So I think it might be a currency.
We pause real quick for here. So this is interesting in CNBC because the guy that's questioning Pomp here is actually like the bull for Bitcoin. He's been the one that's been carrying the torch for Bitcoin on the CNBC network for like the last 5 years, even when everybody else has kind of been naysaying it. He's basically gut checking Pomp. Like, are you kidding me? Like, a Wall Street asset cannot grow at the pace that you're saying. And we're going to go look at the numbers and see actually what Pomp is saying once we get done watching this clip, because what he is saying is pretty extraordinary. He's talking about triple digit growth in a very short period of time.
Because it's going to stay at 47,000.
Well, look, the world is changing for sure. I mean, last year, the NASDAQ was up 50%, right? And so there's definitely these big moves that happen in the traditional markets. Bitcoin, obviously, is that on steroids. But the other thing that's now starting to happen, Fidelity just came out, and they've got a fund. It's an all-in-one fund out in Canada. And they're going to put 1 to 3% of that fund into the Bitcoin ETF. And so what you're going to start seeing is not just direct inflows into the Bitcoin ETFs. You're going to start seeing them putting Bitcoin into all of their funds because it, from a risk-reward standpoint, drastically improves the performance of these portfolios. And they're going to start to realize if I'm lagging indicators, if I'm lagging performance, if I put a little bit of Bitcoin, 1 to 3% into this portfolio, it's going to enhance my returns.
Bitcoin, I think it might be good if it stayed at 47,000 for a year, because then people wouldn't worry about buying a pizza that's worth a Mercedes 2 years from now.
The joke in the Bitcoin community is the real Bitcoiners want the price to stay low so they can accumulate more of it, right? But obviously, when you have this much demand, the price got to go
up. A year from now, it's where?
It's much higher. I think that if this continues, if we have 12 and a half times more demand than we do incoming daily supply, and remember the halving is coming, so we're going to go from 900 Bitcoin to 450 Bitcoin a day. I mean, this thing's going back to its all-time high. It's pretty much guaranteed at this point.
What's that other thing called, Becky? Whenever we talk about the halving?
He makes a rapture joke.
We all go up to heaven and something. Someone's left behind.
The rapture.
The rapture. Halving is like the rapture to you really hardcore.
Let me ask you this: you're a bull, you're an owner. What's the thing you worry about? Being wrong about?
Yeah, I think the biggest thing is it's not so much right or wrong as much as it is like the return of this asset is going to dampen over time, just as it gets larger and as the holder base changes. One of the things that hasn't happened in the Bitcoin community previously is things like rebalancing. And so when you all of a sudden give financial advisors an asset, and let's say you have a 1% allocation and it goes to 5%, you're going to sell. You're going to rebalance that portfolio. And so when the holder base is changing, you have to understand that the return profile will come down. And so if you think that you're going to buy Bitcoin and it's going to help you retire, those days probably are behind. But what it will do is outperform stock.
But then you're not in the camp of the Kathy Woods $500,000 million base case Bitcoin valuation issue, because by the way, if that's true, then you can retire.
Yeah, I mean, look, again, it depends on the timeline, right? So if you're saying it's going to go from 50,000 to 500,000, which is 10x, and that's going to happen over the next 10 years.
Yeah, I think she thinks that that's what's going to happen.
That's not that crazy, right? I mean, again, NASDAQ was up 50% last year. I'm not saying NASDAQ's going to go up 50% every year.
This is the next thing. So basically, Kathy Woods says like we could go to $1 million Bitcoin by the end of the year. Pomp is tempering that, saying maybe 10 years is not crazy. The thing that he says next in this video is the absolute critical thing to think about, which talking about changing the denominator and why those zeros are going to get added to these things. It doesn't have all to do with investment going in. It has to do with the denominator changing on what a dollar is worth. Go ahead and let that play out. We'll hear what he says.
It has completely lost all ties to reality because we are printing an enormous amount of money. The interest payment on the debt is $1 trillion, right? It was a video game number. And so in that world, how much are these assets worth when the denominator is just being debased away? They're going to be worth a lot more. You can just start putting zeros on the end of the values of these assets.
Anthony Pompliano. Pomp, thank you, sir.
Absolutely. Thank you, guys. Appreciate it.
End of interview. We don't talk about that. So anyway, it was a great little bit of analysis. I think because he's on CNBC, he stayed away from saying the shockingly high Kathy Woods numbers, but we're going to dive into his analysis. I took all of the assertions that he made, and I've made some graphs that Sohail has got queued up in the player. So we're gonna record an episode of Ask Dr. Bitcoin here, and we're gonna talk about what he said. We're gonna leave a little spot for the video to play back on the on-demand asset, and then we're gonna go and dive deep into these graphs and kind of discuss them and discuss what the implications are of what he's saying in terms of supply versus production.
Cool. So you want to hit the script?
Yep. We'll start with the script now. Hey everyone, Mark here, and we're diving in today into a fascinating discussion that's been lighting up the crypto world with Bitcoin's recent surge past the $50,000 mark. The spotlight's back on the digital gold rush, and there's no better time to talk about what's fueling this phenomenal growth. In a recent CNBC segment, Anthony Pompiano, a heavyweight in the crypto investment space, laid out some compelling points about Bitcoin's current trajectory. Pomp's insights are not just thought-provoking, they're a call to pay attention to the seismic shifts happening right before our eyes. We can insert the clip here. Now let's zoom in on something that's just not interesting. It's potentially revolutionary in how we understand Bitcoin's market dynamics today. I'm talking about the massive inflows into Bitcoin ETFs and what this means against the backdrop of Bitcoin's creation rate. This isn't just about numbers, it's about a narrative about scarcity, demand, and the tectonic shift in investment patterns. Consider this. Over the course of financial history, we've seen more than 5,500 ETF launches, as Pomp says. Yet the Bitcoin ETFs by BlackRock and Fidelity have done something unprecedented. They've smashed past $3 billion assets under management, otherwise known as AUM, within the first 30 days. This isn't just breaking records, it's rewriting the rulebook on investor appetite for digital assets. But it doesn't just stop there. Bitwise and 21 Shares ARK ETFs are on a trajectory to also hit $1 billion in AUM within the same breathtaking time frame. The daily inflows into these funds, a staggering $500 million. Let me repeat that. Every day, a new $500 million is flowing into Bitcoin. To put that into perspective, it's like injecting the economic output of a small nation into Bitcoin every 2 days. Let's juxtapose this with the creation rate of Bitcoin itself. Only 900 Bitcoin are minted daily, a number set in digital stone by the network's algorithm. This scarcity is by design, but when contrasted with a tidal wave of ETF inflows, it paints a stark picture of demand versus supply. Let's dive a little deeper. The inflow into these ETFs isn't just a trickle, it's a deluge. With $40 to $45 million worth of Bitcoin being created daily at current prices, the demand from these ETFs alone is approximately 12.5 times greater than the new supply. This isn't just an imbalance, it's an economic singularity that can have profound implications for the discovery and price volatility. But here's where it gets a little bit more interesting. Consider that 80% of all Bitcoin hasn't moved in the last 6 months. This suggests a market of low liquidity, where the vast majority of Bitcoin is held tight by investors betting on long-term gains. The tradable supply of Bitcoin therefore hovers around 200 billion. In this context, the ETFs have vacuumed up about 5% of the entire tradable supply of Bitcoin in just 30 days. This is more than just a market movement, it's a seismic shift. It indicates a level of institutional endorsement and investor confidence that's unparalleled in the crypto space. And another interesting factoid I saw noted elsewhere today in the discourse is that on the topic of the ETFs, they have combined in a short period of time hoovered up more Bitcoin than Michael Saylor, the notable Bitcoin maximalist, has in the entire history of the MicroStrategy fund. So let's turn to some of these graphs here. Let's visualize this for a moment. This first graph we're showing is the AUM graph, shows the explosive growth of the ETF AUM in their first month. It's just not growth. So, this one's repetitive. Let me think about this for a second. I should have done a verbal run through before we did this. Okay. So we can visualize the makeup of which of the top ETFs and their assets under management, how they're made up. As you can see, BlackRock and Fidelity hold the majority, but there's not an inconsequential amount under the second two as well, the Bitwise and the ARK ETF. In the second graph, okay. And here in the second graph, we compare the daily ETF inflows to the amount of Bitcoin being created. When I say the numbers, it doesn't necessarily create a mental picture exactly like this graph will do. You can see the stark contrast isn't just a gap, it's a chasm, highlighting the demand that's out there outstripping the supply by leaps and bounds. And now we arrive at what I like to call the moment of truth in our journey through the Bitcoin current surge and what the future might hold. As we pull up this next chart, we're diving into a visual representation that's more than just lines and colors. It's a story of supply, demand, and the raw potential of whatever comes next in the script.
Sorry, you want to say that again?
That's fine. And now we arrive at what I like to call the moment of truth in our journey through the Bitcoin. Let's try it again. Read what's on the script. And now we arrive at what I like to call the moment of truth in our journey through Bitcoin's current surge and what the future might hold. As we pull up this next chart, we're diving into a visual representation that's more than just lines and colors. It's a story of supply, demand, and the raw potential of Bitcoin leading up into its next halving event. Based on the insights from Anthony Pompliano and the unfolding market dynamics, we've crafted a projection that's grounded in hard data yet speculative in its outlook. Here's what we're seeing. At the starting point, we're at a juncture where Bitcoin's price hovers around 50,000, and it isn't just a number, it's a test. Okay, I really should have edited this. Go back up to the previous paragraph.
What do you mean? You wrote it.
I know, but I didn't say it out loud before, so I don't know. Whatever.
I know. Wink.
Yes. Based on the insights from Anthony Pompliano and the unfolding market dynamics, we've crafted a projection that's grounded in hard data, yet speculative in its outlook. Here's what we're seeing. We're at a juncture where Bitcoin's price hovers around the $50,000 mark. The demand surge is the ETFs, particularly those spearheaded by giants like BlackRock and Fidelity, as we mentioned, not only entered the arena, but are gobbling up Bitcoin at an unprecedented rate, absorbing about $20 billion of tradable supply in just 60 days. This isn't an everyday investment trend. As we said, it's a tidal wave. The mining supply, as you can see, is, as we've talked about 900 Bitcoin a day. After the halving, it'll be about half that. So at the current level of cost, it's about $45 million worth of Bitcoin entering the market every day. We compare this to the $500 million inflows for the ETFs daily, and the scale imbalance becomes crystal clear and starts to compound upon itself pretty quickly. So that's what this graph here is, the projections. This is a logarithmic scale showing the bear case and the bull case. The best possible case scenario is we're looking at $100,000. Sorry, I've gone off script here. Okay, let's go back to, just start at our projections. Our chart here showcases the two paths forward. The conservative projection, marked in blue, suggests a steady yet significant increase in Bitcoin's price, reflecting a sustained demand against a limited supply. And then there's the green line, our best case scenario, where we see a potential sprint towards $100,000. This isn't fantasy, it's a possibility grounded in the current market dynamics, assuming demand doesn't just hold, but escalates as we approach the halving. Understanding the delta in the shaded area between these two projections isn't just for show, it represents the range of uncertainty and the potential for Bitcoin to outperform even our most optimistic estimates. In a market driven by sentiment, innovation, and a bit of speculation, the true path of Bitcoin's price could surprise us all. As we dissect these projections, remember, we're navigating a landscape where traditional financial theories meet the uncharted territory of digital currencies. This graph isn't just a prediction, it's a tool for understanding the forces at play in the Bitcoin market as we edge closer to the pivotal moment in history. Okay, I just want to make sure, I want to reread this conclusion real quick. Yeah, let's just skip to the, so what do you think? Because I wrote two conclusions. So what do you think? Is Bitcoin gearing up for another record-breaking run, or are we in for a surprise? Drop your thoughts in the comments, and let's keep the conversation going. And if you found this analysis helpful, don't forget to like, share, and subscribe for more insights from the world of tech and crypto. Until next time, this is Dr. Bitcoin signing off. Yeah, I don't know. I didn't have time to really proof this like I wanted to. What do you think?
I think the content's there. We could probably cut where we need to, cut around it.
Yeah.
Just like break down his numbers, analyze your graphs, done.
Yeah, problem was I did two runs at the analyzing thing, and I didn't deduplicate. And whenever I merged everything together, I was kind of in a hurry. Sorry, I'm just looking at the script to see what we can cut real quick.
Yeah, no worries. If you want a sec to workshop,
I would just say,
I mean, meant we could cut in post.
Yeah, that's what I'm saying too. I was just going to give a recommendation to the editors while we got the video here. We could probably cut. So there's we'll include the script, right? I guess so they can kind of look.
Script and the charts.
Okay, so everything that starts with graph and analysis, a lot of that was repeated in the like the bullet points under basically the mining supply and the demand surge. Basically, that's the two parts we're compressing. It'll be obvious. I don't need to go give just the parts where I've repeated myself, basically. So where am I? You got the document up. So it's going to be like this section right here.
Yeah.
That's where all the duplication is. So pick your poison. Whichever one sounds better, that's the one we'll use in post. Okay. Yeah. Is that good? Do we need to do anything else?
I don't know. I was doing a lot. I was trying to watch you. I think you like read that shit, but maybe that's not a bad thing. Maybe it was my pace of the prompter.
It probably was a combination of both. I mean, keeping it short's good, and also the graphs do a lot of the talking.
Yeah,
so,
that's what I was saying. just like go to analysis, go to
I mean, that's why I'm saying we don't need to include the whole clip, because like the first half of the script is just me recapping everything he said.
Yeah, just include. Yeah, we can guide them a little.
Okay. Cool. Well, thanks for hanging in with us there, viewers. I think Amy said she was going to watch. So hello, Amy. And it was a great little video. Hopefully we get this out on the network pretty quickly, because it's a lot of, it's pretty good alpha. I mean, the way he's talking about it, it makes a ton of sense. And I can't wait for his prediction to come true. So, if you want to hang out, and we'll be here most of the week. I think we're coming in with Frank tomorrow. Mark Shutt's still out, and it's up in the air whether or not we're going to do Merge Roundtable on Friday. Depends on a couple of factors and who's in town. So definitely stay tuned tomorrow, and we'll have more information for you about the rest of the network programming week then. You're watching The Merge, business, finance, and tech news and opinion. We keep you up to date so you don't have to go out there searching for what's new. You can hit that subscribe button, hit the bell, hit the TikTok subscribe, the Instagram subscribe. We're going to keep you up to date wherever you are.